Hello everyone, and I hope you all are doing well. Today I'm gonna do the Euro USD chart analysis for today's trade. So let's get started. First of all, let's take a look at the news, and we are having multiple high impact news in USD today. So be cautious around 5:45 p.m., 7:15 p.m., 7:30 p.m. and 11:30 p.m. Indian Standard Time, since these high impact news can lead to a high volatile and high spread areas. So now let's move to the charts. So this is the monthly chart of Euro USD, and the price was having equal lows, and the price swept these equal lows and broke this high. This gave us a strong low. The price reacted from this strong low but couldn't break this high. Rather, we broke below the strong low. So after breaking the strong low, the price retraced back to this level over here where the candle had taken the high of the previous monthly candle, making this a strong zone of reaction. The price reacted from this strong zone and moved into the downward direction but couldn't break below all these equal lows, rather, it swept it. This sweeping of the equal lows gave the market a bullish push. So, yesterday we had a candle close of the monthly levels. So, currently we can see that the price had closed below this particular level, which is a sign that we are still bearish into the market. Sorry about it. Which is a sign that we are still bearish into the market since we are not sweeping the lows. So there is nothing much clear into the monthlies. Let's move to the weeklies. This is the weekly chart we are having, and what do we have is we are having this uh, order flow being maintained by the market, but currently what do we have is this level over here where the candle had taken the low of the previous candle's low, making this a strong zone of reaction, and it is also unmitigated by the market. So I'm anticipating that if we are going to have a reaction, most likely we are going to react from this zone over here, and if it is being broken by the market, most likely we are going to continue the bearish trend into the market. So currently what do we have is that we are having this strong zone which is already mitigated. So most likely I'm anticipating the price to show a reaction from either side. So let's move to the daily, since we are not having much clear price action uh, into the weekly levels. This is the daily chart, and what can we see here is that the price was following an order flow, and this was the flip zone in the market, which I had already explained in my previous videos. And I was also anticipating the price to move from this zone over here, and that is how it happened. So yeah, what do we have here is that we are having an FVG into the daily levels, and we are also having this unmitigated order block by the market. So I'm anticipating the price to at least reach this order block, which is backed by the weekly unmitigated wick. So I'm anticipating the price to move into the downward direction and mitigate this order block and then move into the either side to show the bias of the market. So now let's move to the 4 hours. This is the 4-hour chart, and things are a little bit clear here, since this was the flip zone over here and the price reacted from the flip zone, making this a strong high. The price reacted from this strong high, took this liquidity and moved into the downward direction. Currently what do we have here is we are having this accumulated liquidity into the market. So I'm anticipating the price to move into the downward direction and take all these liquidities which is accumulated right here. Currently we have uh, almost nothing into the market as a slowdown sign. So I'm not anticipating the price to move into the upside direction now. So let's move to the 1 hours for a clear picture if we are having any slowdown signs in the smaller time frames. So into the 1 hour, we can see that the price is still closing below the sweeps in the market. So I'm still not anticipating the price to have any reaction point unless and until we are going to have a slowdown and then move into the upside direction. So let's move to the 30 minutes. This is the 30-minute chart, and we are having something similar to that structure. And we can also see that the price is having this trend line liquidity. So most likely we are going to take this trendline liquidity and fall back. But still, the bias is still not much clear, since we need to see if we are going to react from some zone over here and then move into the upside direction, or I had seen something. So this was the unmitigated candle, most likely. If we are going to have a slowdown at this zone, most likely we are going to react from this level and again break this level, since we are already bearish into the market. So let's move to the 30 minutes. Yeah. So I'm anticipating the price to at least move into the downward direction, mitigate something over here, and take the liquidity which is accumulated into the upside direction, that is trendline liquidity and all. So most likely this will be a reason for the price to take the Asia high either way and then move into the downward direction. So for today's buyers, what I'm anticipating that the price is going to touch this level, then take the Asia high and then go into the downward direction. If we are going to break this level without any reaction, most likely we are going to continue this journey and respect the 15 minutes strong highs and take all those lows accumulated into the higher time frames. So this is pretty much it. Now let's move to the questions segment, and this is what we have today. To answer this question, what is the perfect answer of this question? The question is, which of the following best describes the grandfather, father, and son strategy in trading? So the options are: A, strategy one, that is a strategy where traders focus solely on short term price movements. Second, a strategy that involves using three different perspective of time frames for trading decision. Third, a strategy that involves using three different indicators for technical analysis. So comment, do comment the answers, and I like the answers whose answer will be in detail. So thank you for watching.